I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. Let's do it. Yeah, so we really got smoked today. This is a real bad intraday downtrend day today. We closed down about 1.75% in the S&P, 1.75% in the Qs, and the IWM had some real damage, almost 3%, 2.75%. Yeah, really pretty rough there. So you got to respect the market technicals. The market technicals have been giving us a little bit of a mixed signal. We spent a lot of time in the morning meeting today discussing again this downward trend line on the very big picture versus this small medium term uptrend on the large picture. Sorry, I said that backwards. The downtrend on the big picture and the small to medium uptrend on the smaller picture here for the market, and that's kind of building out like a very big picture wedge in here right now, and we want to see which way that wedge is going to break. Most of the time, the larger time frame trend is going to be the winner. So that would mean that if we have the smaller time frame uptrend and a bigger picture downtrend, which is exactly what we have, one of those is eventually going to have to fail. Most likely, that will actually be the small time frame uptrend. We can also do an analysis of the 200-day, which is a powerful moving average. The market got above the 200-day, but the market getting above the 200-day doesn't really mean anything to me. And this is what I talk about all the time when I talk about how moving averages are not support and resistance, that you really should not trade off in them. What matters more is the slope of the moving average. The slope of the moving average tells you the essence of trend for that moving average. So just because it gets, above that moving average, but the slope is still declining, that's actually an additional piece of information that also says that this rally that we've been experiencing should fail. With all of that said, eventually at some point, the lower probability situation will actually win. The lower probability situation would be the smaller time frame uptrend reversing the larger time frame downtrend. And the downtrend here has been so big and so vicious and so important and so obvious that everyone knows about it. So it's not surprising at all, even if it is going to break, to see the market struggle into the area. So we'll see what happens. I, from a game planning perspective and a thought process perspective, I'm going to continue to respect these smaller time frame technicals. I'm going to still say that I would rather be long than short, but there's a few key spots that we discussed in the morning meeting. One is the job number lows, which are really not reflected in Friday's candle. The job number from Friday at 8:30, where we got absolutely destroyed on that, and then we called for that long as a team off like SPY $400, and they rallied that all the way back. So you can see here the low was SPY 400 pretty much exactly. So I'm really looking at this low as like a momentum spot. I think that us getting below the low, and getting below the low doesn't really matter. Closing below the low is what matters, and that did happen today. We closed by the low, albeit by a very little bit. It kind of just takes a little of the momentum out of the market. It takes some of the wind out of the sails of the market, more so than it actually changes the picture. I really only think that the uptrend is broken if we lose the Jerome Powell November 30th low, which is still a ways away at 393.50. But today was certainly not a good day for momentum bulls that want to see us immediately get back above the 200-day and immediately go after that downtrend line. So right now, as we're building out this kind of interesting market wedge, this absolute recent high into about 410 is extremely important on the upside, and I think that this 393.50 is extremely important on the downside. Whichever way we break, you're getting a resolution of trend. If we break down, you're getting a resolution of this uptrend where it's done. If we break up, you're getting a resolution of this big picture downtrend to the upside, and that can have some serious consequences as well. So it's a really interesting market environment, and we'll obviously continue to monitor that situation. Today was a really, really weak day. I traded really poorly today. I was way too aggressive, way too early. I got faked out a little bit by some opening strength in some of those growth names when I was thinking that the dollar was still acting a little bit weaker, and I was just too aggressive too early. It came into the week. I shouldn't have done that, and I should have managed my risk. I should have managed my game plans a little bit better. Is really the right way to say it. More so than managing my risk. I just kind of had too much size too early in a few things and gave it a little bit too much space. But just kind of is what it is. Just gotta learn from it and move on and make sure that you're managing risk throughout the day. So we saw some of these names give some really good initial pops, like this Affirm here off the open, kind of going after that 15. That stock has the ability to squeeze. I thought that was an important area. Or this DKNG for 1550 for a breakout, and it's not too extended into that level with a little bit of an inside day there. So that was another one that I kind of went after early, and this big pop came in, and whatever. I didn't have the best pricing in the world. I gave it a lot of space, and I kind of just got hit pretty hard in those names. I tried that IWM at one point today, and I took a loss on that also. I'm trying to remember where I even tried that as I look at the chart. Yeah, it was into this area here, right as that ISM number came out, and that helped the weakness. But we were weak even before it. And since I had this IWM chart up, it's another great opportunity just to once again point out what we have seen happen over and over and over and over and over and over and over again this calendar year, which is that when the IWM is trading like this, even if the Qs are trading like this, the rallies tend to fail. You really need the Russell participation. I'm not surprised that we pulled back a little bit today. I'm surprised by the degree of the movement, which was really the same thing from the other side. Like on Friday, when I was calling out for that buy versus SPY 400 pre-market, I didn't think that we'd be. I legitimately did not think that we would be able to fully fill the gap. I thought a bounce in that area made a lot of sense. But these moves are so exaggerated still. We fully filled that gap, like incredibly impressive to go from 400 to 408 intraday. And then today was the actual opposite, where fine, some backing and filling makes sense. But if you asked me this morning, hey Derrick, is it possible that we have a down day? I would say absolutely. We're gapping down this morning. We'll be a little bit oversold on a small time frame. We could get a bounce back. The big picture technicals are still bullish, but we could have a down day today, and we could be totally fine. But I really did not think that not only would we have a down day, but that in one trading session here today, we would entirely negate all of that work from Friday off of that jobs number, and that is exactly what happened. So we're just still getting some really big, really elevated moves, and there's been a lot of appropriate chatter here in the VTF that this is happening with a VIX at $20. We're still moving like multiple percentage points a day, 2% a day on a VIX at $20, and that can't last. And that's another interesting thing. I've really been trying to have an understanding of who's in control on this market between bulls and bears, obviously, because there's just so many factors that you can kind of point to on either side of the argument right now. And another one of those bearish factors, honestly, is where the VIX is. VIX at 20 with the market still moving this way, and the entire calendar year has been sell VIX 20, buy VIX 35, and we're right into that sell spot area. Look, eventually this stuff is going to change, but one of the things that I've really learned over the years is whatever your normal is for the market environment that you're looking at, whether that normal is volatility or that normal is trend or that normal is grindy price action with low volatility or that normal is high volatility, whatever the normal is, you should just always assume that normal is going to stay that way forever. It won't. I promise it won't, because the market environment is constantly changing. But one of the best things you can do is assume that whatever the phenomenon of the market is that you're looking at any given point in time will last forever until it shows you that it no longer is. And then when it shows you that it no longer is, then you've got a new market normal, and you adjust to whatever that new market normal is. I think if people can kind of stick to that thought process, they would be immensely more profitable than always trying to assume that something is going to change, that that the downtrend's going to have a bottom, or that the uptrend's going to have a top, or that the volatility is all of a sudden going to stop, or that the volatility is automatically going to start coming in. Let it, whenever you have a certain normal for the market, it's going to be more profitable just to generally assume that that normal is going to stay that way until it doesn't. And then when it shows you that it hasn't, then you kind of adjust. And I know we try to be forward thinking, and we try to think about, well, is this time different? Is this, fourth test or whatever of this big picture downtrend line going to be the time that we break? Maybe it will be. One of these days it will be. But just don't assume that this is necessarily going to be that one. And if you've got that thought process, then it's going to help. And again, for myself today, I was too aggressive, too early. I had a couple okay trades. I had a good opening trade in Amazon in this 93 area that I kind of was able to buy up. I initially bought a dip in Apple and was able to sell it all into this move. And then before that failed, I had like an okay couple of trades in Google today. But I also just did a bunch of things poorly and took losses and more stocks than I kind of typically do in an individual trading session. So, whatever. Not the best day in the world for me. I probably should have been a little bit less aggressive, given these different dynamics of the marketplace that we're kind of discussing here as a team. But I wasn't, and tomorrow's a new day. Honestly, the thing that I'm more upset about than some of the losses that I took today is not capturing this XLE short through 90 that I've spoken about like in every morning meeting for the last like 2 or 3 weeks now. I keep talking about this XLE through 90, XLE through 90, XLE through 90. I know it's a strong ETF, but I really want to short it. And Pat had given us that chart in his morning note the other day that showed the difference between where WTI is trading versus where the XLE is trading, and it was like a really, really good piece of information. And it's finally hit the point where this energy trade is maybe becoming a little bit crowded. And then this gave the perfect setup for it too. I didn't like it here. I remember, and this is probably part of what messed me up, is that when we got to that 90, it was straight down into 90. I'm not shorting 90 here. I'm not shorting 90 here. When you go straight from 91.50 in the energy ETF, from 91.50 to $90 in a vertical waterfall line like this, 1, 2, 3, 4, 5 straight candles in a row, and now this is the 6th candle and it's red as well into $90. You don't want to short that. The risk reward there is no good. You want it to set up a little bit better. But then guess what? It's set up perfect for the actual trade. They made this market go sideways here, digest this down move into this gap fill for like over a half hour here. It ends perfectly with this inside 5 setup right as the moving averages have completely caught up. This was a layup of a trade if you were still paying attention to it, which I took my eyes off of it at 10:35 from an execution perspective to be able to short through 90. You could have shorted through 90 here. Your stop loss, 90.28. If you even want to be conservative, you probably could have been even a little bit tighter with it. You take 28 cents risk on this trade. It's a big picture trade. Immediately intraday today, it's giving you $3 worth of reward. And I think it's very reasonable for this XLE to pull back to 83, this 83 area, 83.50, $83, something like that, which still has another $4, $5 a downside from where it's currently trading. So I'm actually more upset about missing this trade that I've been stalking for weeks than I am about losses that I had a game plan for, and I got involved in those trades, and the trades just didn't work out. It kind of is what it is. But this is annoying to me. With that said, I got to remind myself something that I tell you guys all the time when I'm doing meetings and everything, which is that the market's an opportunity creating mechanism. So you will never be able to capture every single trade in every single market. It's actually impossible. But you game plan them as best as you can. You try to be prepared for them. You really should be prepared for the ones that you've game planned to not miss them. So that's why I'm beating myself up a little bit. But you're never gonna be able to catch them all. The market's an opportunity creating mechanism, and there will be more opportunities for me again in the future. And I think that is all that I've got for you guys today. So I'm happy to answer any questions or to, take a look at any of the stuff that you guys are looking at.
Well, I don't need to search. I'm going to add another one.
All right. So scrolling up here in the VTF. Doesn't really look like I missed anything. From Bill K. Theory on why the VIX has been getting hammered. Historically, they used to use front month options, which were basically how the VIX is priced, right? The VIX is the 30-day rolling implied vol, so it's priced off 1 month options. But if there's not so much demand for 1 month options because everyone's using 1 day options, then it makes sense that the VIX comes lower because those 1 day options are. Sorry, I got distracted looking at stock.
I haven't gotten an email back. Should I look in my junk just in case?
But if there's not as much demand for 1 month options because everyone uses 1 day options, then it makes sense that the VIX comes lower because those 1 day options are taking over the flow. They're not priced into the VIX. I personally think the key is watching for 0 data expiration volumes to come down, and that should allow for the VIX to rise. That's really good information. Is there a version of the VIX that is specifically built off of one date expiration options? Because I had seen like a 7-day or something like that at one point chart. I remember reading something, this was like a month or two ago, and I had mentioned it to you guys, where there was like a really interesting deviation between like this lower time frame VIX and the traditional VIX. It'd be curious to see like maybe that small time frame VIX on a day like today, or just even in general, is just ripping, and we don't fully see that in kind of the actual VIX, which is back at $20 at this point. So yeah, really good information there, Bill. I appreciate that. From Rex, I was trying to short Roblox this morning. on the second candle when the Qs made new highs and the IWM made lows. Yeah, that was an interesting one on the second candle. Okay. Roblox barely made a new high. Yep, I put my offer on the weakness to short, but it just kept going down and I didn't get filled. Do you think I should use market orders instead? Yes, so it's always one of those tricky things, Rex. It depends a little bit on the type of trade that you're working with. I personally always prefer to provide liquidity whenever I think it's possible, because that way I don't have to pay the spread. I can get a ECN rebate for doing it, which, not paying spreads and getting rebates as opposed to paying the exchanges if you do, real volume, which I like to think I'm a decently high volume trader, can have big effects. At the same time, you don't want to be cheap for a 1 penny spread and a really small rebate, and then miss a monster of a trade like this where you're trying to save yourself 1 penny and you miss a $3 downside move. So it's definitely one of those tricky things, and I think part of that depends on the type of trade that you're getting involved in. So if the trade that you're taking is more of a momentum trade, which honestly this doesn't look like a momentum trade to me, if it's more of a momentum trade, then you kind of have to take liquidity on the entry, or at least on some of the entry, to actually make sure that you get stock. Because if there's good momentum, let's say it's momentum to the upside, they're not hitting bids. They're just taking offers, and the stock is just spreading up and it's moving up, and you're either taking that offer too and you're getting stock, or you're not getting stock either. Part of it definitely also depends on extension a little bit too. Like if you've got upside momentum but it's really extended, you might be able to bid in and still be able to get stock, but then you got to recognize that you're buying an extended stock, which is what I did a little bit of today, and you always want to be a little bit more cautious when you're doing that. So it kind of depends on those situations. A lot of times I find that I kind of can go inside bid or inside offer and get stock, unless it's just a pure momentum trade. Also, what I do a lot of times is a combination. My first entry to make sure I get some stock, especially if it's a smaller entry, which is what I do a lot, will be me taking liquidity. I'm just going to take that liquidity. I want to get some stock on my books. I don't care if it's this is a smaller part of my position, so I don't care that I'm paying the spread. I don't care that I'm you know, paying the ECN fees. I want to make sure that I get stock. And then I bid in after. I do a lot of that also. But you want to be careful because, you know, again, if it's a momentum trade, let's just continue to talk about longs. If it's a momentum trade and you're bidding in and you're getting filled on those bids, it means your trade inherently has a lower probability of success. So you got to pay attention to all that stuff. For this trade, if you shorted Roblox on that second bar, I probably would have tried to provide liquidity by going inside offer to get short and not hitting the bid on this. I would think with some confidence that I'd be able to get some stock into this down move on the offer at some point. Sometimes I end up doing a little bit of chasing, which can hurt me also, where it's like, oh, I could just hit this bid at 33 cents. Instead I'm offered at 35 cents, and next thing I know I'm offered at 30 cents when I could have just hit the bid at 33 cents to begin with. That happens a little bit sometimes too. So there's some nuances to it. I don't think it's an exact science. Because you want to be conservative with your costs and paying spread as much as you can be, but you also need to make sure that you don't miss a $3 move because you were trying to be cheap by a penny or two. So I don't necessarily, I mean, I don't see how you executed it, but if you're trying to go inside offer on the second bar, to me that doesn't seem like the wrong thing. For Millerbot, thoughts on whether there was a change of character today? Sell-off was wide-ranging across oil, retailers, tech, financials, metals, and no rotation, just selling. That's a great question. So my answer to that question, and this is why I made a comment chatting into the VTF when we were rallying here in the last, like, kind of 10 minutes a little bit. It looked like I thought for a moment we were going to close, like, at SPY 400. We closed, whatever, just below it. I was like, oh, let's have them close it at exactly SPY 400 to make the afternoon meeting particularly difficult to me. Because basically, to answer your question, I think that there's a change in character on whether or not we close above SPY 400 or below SPY 400 today. SPY 400, because it's the momentum low from the jobs number on Friday, that's a change in character to me where the momentum portion of this uptrend kind of gets lost. Like this pullback becomes deeper than it should be with a SPY close below 400. It naturally means that, yeah, you know, the uptrend's still intact and we're just in this equilibrium area. The technicals here are still intact on this small time frame. The uptrend hasn't reversed, but just from like that pure momentum perspective, we closed really good on Friday. We were not that extended as of Friday's close. We gapped down this morning. Like easily could be buying like SPY 405 today and getting the close back at SPY 410. The opposite happened. We closed all the way down like almost at exactly SPY 400, and I think that a close below 400 does take that momentum out a little bit. We closed like what, 20 cents below SPY 400. We're almost back at it right now after hours, so I don't want to overread it. I think that it's a little bit of a warning signal to pay attention to. But it's not so convincing to me that I feel certain about an environment change here, at least on a small time frame yet. I think that we'll know by tomorrow. How do we react tomorrow? Do we rally back up above 400 and then this just becomes a potential pivot low back in equilibrium again? You know, everything's back to being good, or does this weakness that we saw today give some sort of continuation where we have another like close on lows type of deal tomorrow? If we close weak tomorrow, even if it's not a big down day, but even if we close on lows tomorrow, anywhere below SPY 399, then I think yes, you're right, and we do kind of have this change of character. So not 100% sure yet. Need a little bit more information because the Q's still held that low. The Q still held that low, and for the IWM it's 183. We're at 182.98 after hours. So Qs are saying no, and SPYs and IWM are saying maybe. Let's find out tomorrow. Great question. From Dave, in the scenario where you're holding a small part of an intraday winner for a swing, do you ever want to delta hedge a little bit by selling a call against it? I don't trade options, so that's a quicker answer for you on that one. I've thought about it honestly recently, even though I've never been an options trader. I've actually thought about adding options on to what I'm doing really specifically for kind of some of the playing around with some of the stuff that you're actually describing here perfectly. I'm nervous to limit my upside a little bit. But for some of the stuff that I'm in, and I'm planning on it being a little bit of a larger hold where I think it could be more of a grind in my favor, to me that sounds like a good idea. So do I ever want to? Do I ever consider it? I've actually started to consider it recently, but it's not really something that I've ever personally done. I've always been, very much a directional kind of trader, and if I'm in it and I'm keeping it overnight, it's because I've got this profit cushion that I'm willing to risk on, and I'm looking for continuation on that, and I don't want to overcomplicate the strategy, but it might be something that I start to work into my trading a little bit in certain scenarios in 2023. I've been toggling the idea around in my brain. So, thanks for the question, Dave. From Steve on Amgen. Amgen had some good news, but it may take a long time to play out, and it's a pretty nice uptrend. What do you think of the chart? So I missed the news. Chart looks fantastic. If the news came out, I'd be curious to know why it didn't react on it better. If this news came out today or in recent days, why it wasn't stronger. Obviously, you know what? It was strong. It was strong, considering what the market did. Was it down 0.5%? Yeah, this thing was actually pretty strong today. Sorry, getting distracted. So looks like it's a really strong daily chart. It was really relatively strong today. Maybe even tried to go today, but the market caused it to fail. Keep an eye on it. 288, I think, is a spot for continuation. From TJ, ECL. ECL, been watching it. Feels a little like a diamond reversal pattern. It's a Bill Gates special. I knew I recognized this name. Secolab. He's been buying on his most recent 13F. Volume is strong. Best entry feels like a break above 153. Yeah, building out this kind of wedge here. Yeah, for now the break of that wedge would be 153.50. You could probably get this also held in pretty well today. You could probably get a jump start on this above either today's high or Friday's high if it triggers. 150, 160 to like 152.25. But the real spot I think is 153.50, and then this 155 is a big level also. But it looks decent. Worth keeping on the radar. Alright guys, does anybody else have anything? I don't really have anything else. I'm annoyed at myself today. So, it's a Monday. It's a long week to already be annoyed at myself. Interesting close. We'll see how all that plays out. Penny saving me a little bit with this sumo after hours. Anybody have anything else? It's a little earlier than we usually finish up our meetings, but I'm also happy to call it if you guys want. Going once, going twice, sold. All right, have a fantastic evening, everybody. See you all tomorrow. We'll see how we got.